So you're living abroad, right? But you're still planning your financial future back home in India. It's a reality for literally millions of us. And honestly, between navigating bank accounts, figuring out taxes, and understanding repatriation rules, it's super easy to feel completely overwhelmed. Well, over the next few minutes, we're going to totally simplify the whole process of NRI investing for you in this explainer. Here's our quick roadmap. We'll cover who exactly is an NRI, the mandatory prep work you need to do, the investment universe available to you, taxation basics, and finally, common mistakes. Let's jump right in and demystify your compliance and investment strategy.
Okay, Section 1. Who is an NRI? Let's look at residential status.
First things first, who actually qualifies? Basically, an NRI, or non-resident Indian, is an Indian citizen who's staying outside of India for employment, business, or education for a specific period. And that period is strictly defined by income tax rules. Now, you might be wondering, why does this even matter? Well, because the second you acquire this status, it fundamentally shifts the rules of the game for both your taxation and your investments. Moving on to Section 2, prep work, first steps to invest. All right, so there are 3 mandatory steps you literally must take before you even think about deploying capital. First up, you need a PAN card. Honestly, it's completely non-negotiable for any financial investments in India. Second, you've got to open the correct type of NRI bank account. And third, you need to get your KYC verification sorted out using your overseas address and documents. Now, here is a massive pitfall you really need to avoid. As an NRI, you cannot legally use your regular resident savings accounts for investments anymore. No way. Instead, you have to use an NRE account for any income you earn abroad, and an NRO account for income you earn within India, like, say, rental yields or dividends. Oh, and here's the golden rule to keep in mind. Interest earned in an NRE account, completely tax-free in India. But NRO interest, that is definitely taxable. Which brings us to Section 3, the investment universe. Where can NRIs actually invest? Okay, the fun part. You actually have multiple avenues for generating solid returns in rupees. Direct equity is fantastic for long-term wealth creation, though it obviously comes with some market volatility. Then you've got mutual funds and SIPs, which offer incredible diversification and professional management. You could also look into fixed income products, think bonds or NCDs. And finally, there are gold ETFs. The big takeaway here, one size definitely does not fit all. Your strategy absolutely has to align with your personal goals and your own risk tolerance. All right, Section 4, taxation basics. Know the rules. So let's break down this tax labyrinth, because it can be a lot. First up, capital gains. Essentially, any profits you earn from selling your investments are going to attract tax, and that's based on how long you held them. Second is TDS, or tax deducted at source. This literally means the tax is often just automatically deducted before the rupee amount even hits your account. And finally, we have DTAA, the Double Taxation Avoidance Agreement. This is basically a brilliant legal shield that India has set up with several countries to make sure you aren't paying tax twice on the exact same income. Huge lifesaver. And that leads us to Section 5, common mistakes, pitfalls to avoid. Look, even with the absolute best intentions, critical compliance and strategic errors happen all the time. The biggest, most common mistake by far, people still using their outdated resident bank accounts after their status changes. Just don't do this. Other major errors include completely ignoring repatriation rules, investing randomly without a structured financial goal, or just forgetting to update KYC and nomination details. If you're doing any of these, you've got to break those habits immediately. Ultimately, your financial success in India relies just as much on strict compliance as it does on your actual market returns. I mean it. Smart investing is all about solid planning, being totally aware of taxation, and just making disciplined decisions. You have to stay informed and stay compliant. And of course, keep in mind that investments are always subject to market risks, so you should definitely consult your financial and tax advisor. So before we wrap up, ask yourself this: is your current portfolio strictly compliant with your NRI status, or are you accidentally sitting on an avoidable tax trap right now? Something to really think about. Anyway, thank you so much for joining me today. This explainer was brought to you by GEPL Capital. If you found this breakdown helpful at all, please go ahead and like, share, and subscribe for more investor awareness content. Happy investing!